Woodley on the beat.
Alright, welcome back everybody to another episode of the MillionDollarConvos podcast. Now, we have a very, very vibrant spirit here with us. We haven't said much to each other, but I can tell that he's a very real person. We have Mr. Shamar Clarke here with us, financial advisor, correct, at Sagicor. So, Shamar, why don't you go into a simple introduction as to who you are and how you got into the financial markets?
Alright, so the funny thing about that, there are 2 or 3 stories that I can tell.
Alright.
I'm going to stick to the shortest one.
Okay, alright.
So the one that outlines exactly how I really and truly ended up as an advisor.
Right.
Alright, Shamar Clarke, advisor with Sagicor, financial advisor with Sagicor. But I've been in the business of giving financial advice for quite some time, just informally to friends and whatnot, because they think I'm smart.
Of course.
But it's not because I was just smart by that, it's because I made a lot of financial blunders. Right. So I left from University of West Indies, I studied political science, ended up in the hospitality industry. Right. But I always wanted to find out, I was curious to find out exactly how you make money.
Right.
How you make money work for you. When I left Eden Gardens, I ended up at First Global Bank in banking. Right. Because that was the next best thing to say, alright, banks have the money, so they must know what to do.
What to do with the money. Right.
So let me go and figure out what to do. And I went to the banking, spent a little time. Then the other ugly arm or the ugly face of money is when people owe a lot of money.
Right.
So I became a bailiff.
Okay.
The story of how I became a bailiff is another story. So I became a bailiff, and then from becoming a bailiff, a friend of mine, he was killed in a freak accident.
Right.
And that kind of led me, because it was because of my own accident before.
Right.
To think about life insurance. And
Right.
He passed.
So it's a bit traumatic.
Yeah, it was traumatic. So those are the type of, it's stressful, but.
Right.
When he passed on in 2016, it prompted me to look at the life insurance industry, to become a part of it, to say, you're going that now. This is not supposed to happen to young breadwinners like myself and whatnot. So I took the plunge. And at the same time, when I was thinking about coming in, there was a late great in the business, Walter Grant. He passed, and there was this thing, it was all over the news about this big life insurance man and how much money he left for his family and so that means you can use this business to create generational wealth.
Exactly. Right.
I started the journey. I ended up going abroad, decided not to follow up. I started the journey, went abroad, spent a couple months. My manager and mentor kept prompting me to come back and try. I came back, spent a couple months doing the courses, going through the process, because it's not like a one day process, going through the process, the months of process to become
a financial advisor.
Correct. But I think it's a situation where the career kind of chose me more than I chose it.
Okay.
The person that I called to get the interview to become an advisor was my actual financial advisor.
Really?
William. So I called William, and William got me involved as a bailiff. Another friend of mine that was there, that is also an advisor, said that Shamar, you're fitting for the business. And so when she told me that day, and she was stressing me to try, that's when I took up the phone and just called William. I said, William,
yes, I give it a try.
Alright. And then he called me and I got the interview. Started the interview, then the story I told you about going abroad, came back, did the things, and then here I am.
Right. Now, you're a registered financial advisor, as you said before. You went through all those things, life led you. You said it chose you, right?
I didn't choose it.
You didn't choose it, right? So, as a registered financial advisor, you suggest and render financial services to clients, to suit their needs based on circumstance, correct? So, what are some financial planning tools that you would recommend, or what are the most common that you see used today?
Tools, alright. Right. So, funny enough, when I look at what is supposed to be in your ideal financial portfolio, so that's what I do. I'll sit with you and give you a breakdown to say, here we go. Tell me exactly what you want to achieve in the next 3, 4, 5, 10 years, right? And based on those plans, I'll usually give you a structure.
Right.
Right? So some of the structures are some of the common plans that we get to put in place for achievement of your goals are this. Medium-term investment,
Right.
which is unit trust based, right? Because that accumulates behind you, so it's working for you while you're not seeing it. So
Right.
unit trust investment, that is medium term. I ensure that I always push for a person to have a pension, right? It's especially because only 20% of the population really has a pension, right? So we push for that. So that's one tool to help you to ensure that when you get to retirement, there's some cash for you there. I push for a person to get their equity accounts open, which is their stock accounts.
Right.
So everybody need to be purchasing some form of stocks,
Right.
right? That's one of the things that we'll be discussing a little bit later, if the question might come up. Right. The importance of having stock in your portfolio for just for regular growth, for now,
Capital
next
assets.
10 years, or just for the long future retirement. Then you're looking at emergency funds.
Right.
An emergency fund is important.
Very important.
It is vital.
Right.
Most people don't understand or appreciate how important it is until you buck it up.
Right. I realize it.
Yeah, man. Because once you have an emergency fund or a properly funded emergency fund, where 3 to 6 months your income or your expenses, then it reduces it from being an emergency and it comes down to being an inconvenience.
Right.
Because you can afford it.
Of course.
You understand? And then the other thing that I push is that you need to have proper insurance in place.
Right.
Life, critical, just like you insure your vehicle or insure the home or you insure your business, ensure that you're properly insured.
Of course.
So be it health, critical, or life, because of the benefits that are associated with it. So those are some of the tools, but everything that you're looking at right there, there's an underlying thing that we have to start with. And if we don't start there, then we don't get started.
So, what about deposit insurance? Is that something that that is offered?
Deposit insurance.
Right.
Deposit insurance. You mean on your actual money that you
money that you write.
I remember your deposit insurance comes through the JDIC, a company like this. So that they are insured to a certain amount.
Okay.
Right. So it's not something that you come and buy.
Right.
The deposit insurance is there for the financial institution that actually have it.
Okay. So now,
but everything I just need to note. So every single thing that I recommend, it has to start with the person having their budget.
Right.
That's the main tool for your financial growth.
Right.
Having a budget.
I mean, many people look on investments, nowadays as why do people look on investments today as an expense? Like people really say, oh, I'm losing this amount of money, I'm losing that amount of money. You are not losing the money. You are investing the money. There's a big difference between expense and investment.
But let me tell you why. Because the question has come up quite some time, and it's me asking the question usually. Right. But it's I think it's how we've been socialized. Right. Most of us were not brought up in where we understood what it was in terms of financial literacy. Right. You understand? So what we grew up to see is that we like to see all our money bundled up one place. You understand? Yeah. So if we're saying we want to have access to all the money now. So if we've been putting aside $1 million over the course of 2 months, we want to see it right in the account. Yeah. Or we can also
accessible.
It's accessible to us. So that is what we consider to be good financial management. That's how we were brought up. You understand? Yeah. But investments don't work like that. Right. Like you plant the seed and you water it and consistently over time, and you end up reaping. Right. So it's the delayed gratification, I think. Of course. Why we look at investments as an expense rather than an income in the future, because investments, if you really look at it, is really you buying some days in the future from today. Right. Like where you put that? Yes, at some point in time, the money that you're sacrificing to put down today, they're going to come to you later on. Later on in life. Right. It's just how we were socialized. Nothing less. It's just how we were socialized. So, many individuals listening to this podcast right now, are part of the working class or about to join the working class. Correct? Now, we're going to know, therefore, where to put our money and what to do it. You just said, the key asset categories that we need to have. Correct? Now, can you explain to us the importance of asset allocation? How important is allocating the various asset classes and categories based on the amount of money that we have, or maybe even our circumstance. Alright, so you see the type of assets that you're going to want to you're going to want to hold on to or accumulate. It's going to be really dependent on your goals. So when we have a discussion to say, here we're going 3, 4, 5, 10 years down the line, what is it that you want to hold on to? Because remember, stocks are assets, and starting a new business is considered an asset. Right? Getting involved in real estate is also an asset. So what is that you want to do? Is it that you want to buy a piece of property and hold on to it and rent it out for the future, or is it that you just want to be involved in the financial market where you literally just buy and sell stocks and you become a player on the stock market?
Right. So what about delving into all of them? The fund
it is a balance. So it's always going to be a balance. When it comes down to asset allocation, it's always going to be a balance. And I preach balance. So it's not that I just want you to jump into to merely stocks or just merely real estate. It's always supposed to be a balance.
Right. So don't put all eggs in one basket.
No, not at all. And that's, I think that's one of the major lessons that has been taught over the years when it comes down to investments, and something that we really need to just grab a hold of. Diversify. It's not difficult to do it. Right. You understand? But diversify.
Right. So you speak of diversification, and it's very hard when you have limited funds. You understand? It's very hard when you're not taking home that much money. You understand? But you want to diversify. You want to have the money or the assets in certain asset classes. Now, how can
let me ask you a question.
Right.
Say you're earning $60,000 a month.
Yeah.
Just working class. You just start working $60,000 a month.
Yeah.
And after your expenses, you have $20,000 a month. I know you want to invest. Right. Which asset class would you invest at $20,000 a month?
Which? Probably stocks. More than likely stocks.
So it's $20,000, right? It's not a lot of money.
No, it's not.
But you're able to do that, yes?
Yes.
And what if you consistently do it for 2 more months, 3 more months, 5 months?
So it's compound interest.
It's compound interest, so it's going to compound. Right. So I think we're focus a lot or a little bit too much on the raw income, the raw amount of money that we're putting in, rather than the discipline that we should be developing. Because after doing it over a set period of time, it gives you what we call the benefit of dollar cost averaging, especially when it comes down to equities. But then, if opportunities will present themselves, so 3 of us are in this room, right? And then you have $20,000 in excess, you have $40,000 in excess, I have $100,000 in excess. And then we realize that based on what we have now, there's a property that's being sold based on his family that he knows. It's a property being sold that has the potential to be rented out, right? Why don't we join up and get a mortgage so we can purchase the property and rent it out?
So group economics.
Right. So that's also an option. But you see, if you're thinking about growing your asset column and you're growing all by yourself,
right?
It becomes challenging when it comes down to diversifying if you're looking at your income alone.
Okay.
But in the interim, while you're focused on your little self alone, your little income, one of the best places to invest or grow your asset column is through stocks.
Right.
Until then, look at the opportunities in the market. Find some like-minded people, because you need to find like-minded people when you're growing assets. Find like-minded people, and when the opportunities present themselves, partner up. Right. So that gives you the opportunity now of growing capital quicker. So you can take advantage of things in the market.
Right. So we spoke of limited amounts of money, but the JMD, the Jamaican dollar. It's something that on the financial markets is not necessarily the strongest. You understand? It's
that's put it into
it's
rather nicely.
Mildly.
Yes.
It really is. It really is a weak currency, and I think we need to. Let's not get into that. But saving Jamaican dollars, saving JMD, saving money in general. It's not. It's the primary way of accumulating funds by most people. But what some of us don't know is that it's not protected from inflation. Correct? And with every day the Jamaican dollar is weakening, just like every other worldly currency, fiat currency, right? What government tell you say $50, that's $50, right? So, but it affects us a bit more. Now, to hedge against such inflation, what kind of assets or what kind of value can you bring to a client, or can you recommend to a client to hedge against this inflation, whether it be of intrinsic value, probably precious metals, gold, silver.
So commodities, that's one. So I want to mention it, given that you raised it. But before I even say that, let me just clarify or clear something. So the dollar is being beaten out by the silent killer, inflation.
Right.
It's a global phenomenon. It's existed over hundreds of years, as long as there's been money.
Yeah.
Right? There's been depreciation of the money through inflation. The Jamaican dollar, in terms of saving, it's if you live here, you have to save in JD, and then you can do whatever else you want to do.
Right.
But you have to save in it because you're utilizing the currency.
You have to save it or you have to earn it. Which one?
You're earning it, but you have to start saving.
Saving it. Okay.
You can convert if you want.
Right.
But the point I'm making is when you start to invest, regardless of the currency that you're in, when you start to invest, so we're investing in our economy. So me, I earn the Jamaican dollars, and we're putting it back into our unit trust investments, or we're putting it back into the stocks or whatever it is, and watching the appreciation. So we're earning some additional currency on our currency. That is one way of beating the inflation. So we're putting the monies to work in equities. So that is one way you can look at the Jamaican dollars, even though it's getting beaten while but with inflation, it has the potential to grow through investing it in equities.
Right.
Think about what happened to our economy over the last couple of years prior to COVID.
Yeah.
Right? When our stock market was the highest performing stock market globally. Yeah. Yes, and it's Jamaican dollars in investments. Most of the stock performances were in Jamaican dollars. Right? So the gains that you'd have been getting by investing in Jamaican dollars would far supersede what you'd have been getting if you were investing in US dollars.
Right.
You understand? So in that scenario, it shows you where Jamaican dollar, even though it's being beaten out with inflation, has the potential to give you some good.
But I mean, even if you invest, let's say you invest $10 million for the future, that $10 million later won't be the same $10 million.
It won't be the same $10 million. So that's what what you need to be doing is looking at. So in Jamaica, our real estate is totally different now. What happens globally, right? It trends up. So that's one way. If you're investing in real estate in Jamaica, that's one way of avoiding and beating inflation. So let me not say avoid, but beating inflation.
Yeah.
So real estate is one way to go. Right. So once you can get involved in that, if you're investing in the property itself, the hard. So
it's really capital appreciation that
it's capital appreciation. So capital appreciation is one way you can look at. Right. You buy a property today, you bought that 27 million, 2 years later it's valued at 34 million, 2 more years from that is valued at 42 million, it's keeping ahead of inflation. You buy a stock today at $10, next year it's valued at $30, so stocks are a good way, so equities are a good way to avoid or beat inflation. Another way is through real estate. If you don't have the ability or the cash flow to directly buy a property, there are real estate investment funds, you have REIT funds that you can invest in. Right, so these are some of the ways that you can look at. Ensure that when you're shopping around for getting loans, because most persons that are living on loans are some form of loans, ensure that you try to get the ones with the least interest rate. Right. So the lowest interest rate is what you're looking at. When you're saving your dollars rather than just investing, so you have a dollar sitting in a bank or whatever it is, try to look for the accounts that give you the highest interest rate. Right. Yes. So at least the disparity between the inflation and the interest that is being earned, you kind of reduce it.
Okay.
So things like that, and educate yourself about unit trust investments. Unit trust would give you the opportunity of earning or staying ahead of the inflation. When you're doing investments, another point, when you're doing investments, most investments that you're doing with companies, or even like insurance. So look at insurance for that matter. So you can look at insurance as a long-term investment. Good. And there's an option when you're doing insurance or the investments within the company to link it to inflation. So what that does, it allows it to grow ahead of inflation. Right? Or you can index it. So every year, if you're doing an investment or a saving, you can know that each year you're going to consistently increase the amount that you're contributing. So what that does is give you a compounding effect.
Yes.
So those are just some of the options that you can use to beat inflation. Inflation is always going to be there. It's
inescapable. It's right. So you spoke about insurance. And usually, people tend to have these insurance policies over a long period of time. Correct? And I was watching a video, and I think it was Ernie Leisure, and he was saying that he had a friend. He had a friend that invested in an insurance policy, and it was over 10 years, and he had his wife at the time, and his wife was the primary beneficiary, and they left. Then she's the ex-wife, she get alimony plus she get, and then when he passed on, I think, then she was left there as a primary beneficiary. It was not updated. The policy was not updated, and she got all of his money. Right,
Yeah,
so
she's the ex-wife.
yes, right. She's the ex-wife, so you know that's a serious situation. I'm not sure if it happens frequently in Jamaica, but can you explain to us the importance of, you know, updating that policy, keeping checks and keeping tabs on that policy, and how important it is to even establish an insurance policy?
All right. So 3 questions, and they're good questions. So let me take them in strides. It's very important to update the information as you go along. Now, they say the average person buys up to 8 insurance policies throughout their lifetime. So there's a discipline that most advisors put in force, or we enforce, is that we at least meet with you twice per year, right? On the anniversary of the policy, just to do a review, or on your birthday, then, right? Special days. So upon your review consistently, you should now be able to share the information to the advisor as to what has changed. So you should always be in a position where you're consistently updating the information. Within the year, you have a child. Within the year, call the advisor, ensure that this information is relayed, so the policy changes can be made to the policy. To the owners, it's also, while it's on the advisor as well to reach out to the client to just find out what has changed in your life. The onus is on you, the policy owner, to ensure that if there's any change in your life, you communicate to the advisor. So for that particular person, that scenario that you painted, you know you get divorced. You know you get divorced. I know that a black man that
How is that?
I know, because one of the first things somebody was saying, we're going, oh, could have possibly they left with a girl. You call him advisor morning as a paper, as a ink that you would drive on the divorce paper to get the documents updated. So the onus, that's where you see that the onus is on that particular person to ensure that the information is communicated. But there's also a responsibility of the advisor to maintain a close enough relationship with clients. So at least, you know, when changes are made, they say, you prompt them to say, hey, remember so this there and XYZ the policy and this change. You understand? How important it is now to that question, how important it is to get an insurance policy? Vital, important. And we're talking about health insurance, because if you do get sick, you need to utilize it. It's better for you to spend $20,000 rather than spend $100,000 on a policy. Just by having a piece of card in your pocket that you're paid for. Critical illness insurance. Think about you getting sick. Me and you there now, you feel a little pain in your belly, and you go to the doctor, and the doctor says it's cancerous. Where would you get the money to try to fight this cancer? So that without even going further, that explains to you how important it would be to really get a policy in place. And the sooner it is. Life insurance, same thing. Now, life insurance has a lot of benefits that person really, it's not that they don't know, but sometimes they hear the information and you end up forgetting. When you're buying a property, you're going to need life insurance for the mortgage. Full stop. You can't get around it. Right? Life insurance grows, and it grows similar to how a pension grows once you have a whole life policy where the premiums are being invested and the interest is being stored in a policy. Where when you get to retirement, if it is that you have no need for it at that point in time, you can surrender and collect the cash of the policy. So you can literally use your life insurance. It serves two purposes. If you're dead too soon, or you live too long. And then so those are some of the major benefits of getting it. But think about this. The cost that you pay for the life insurance today, I'll even put it in context to show you. In 2014, when William approached me, William sold me, it was $6 million worth of life insurance. For that time, I was paying $2,000 for the $6 million. And I was putting another $2,000 something in savings or investments on the side of the policy. So that was $4,000 for a $6 million benefit. Now, I bought some insurance for myself. And in January, some additional insurance. Not going to tell you the exact coverage, but the rate at which I bought it. If I was supposed to buy about the same, just $6 million, it would have now cost me $6,000 for the same. For the same coverage. Right? So $6,000 now for $6 million, we may have paid $2,000. And you remember, it's not just $6,000. You know. That means there are $4,000 difference every single month. Every year for X amount of years until I'm dead. So if I don't die and I get to retirement, you know how much money that would I end up spending for the same coverage? Where am I going to have it earlier? Insurance gets more expensive as time goes on. And if it is that my health had changed, I might not have been able to even get the policy. So it's important for you, once you don't have the coverage now, find out exactly what the proper coverage is for you and your family and get it in place, get it in force, because all you're going to do is sorry later on when you go and something happens and you don't have it.
Does this run into estate planning as well?
Of course. It's a big part of estate planning. Because think about the bigger your estate be and when you pass off and leave it, So you now have a $200 million estate,
Right.
and it's pretty much really hard real estate.
Right.
So you have some land country and some property where you see you rent out, but it's in your name.
Mm.
So you drop down there to mama, what happens?
What happens to you?
What happens to the property?
Mm.
They have to find a certain amount of cash to be able to use for transfer, taxes, legal fees, all these things to just move the estate from here name to the family members. The money to will it out.
Mm.
You understand? What happens then? You're not a currency, you're not a cash. You have a whole part, you have left $100 million or $200 million worth of property, but no cash.
No cash, right?
Right? So the life insurance now is the purpose of life insurance
okay.
in the estate plan is to provide the cash.
Just give me those annuities, like after a while. Can you explain annuities to us? Because it's something that many people are curious about, but they don't quite get the concept and how annuities work.
Alright, so what I tell you that an annuity, so you can consider a pension an annuity.
Right.
So you understand how a pension works?
No, can you explain to us?
So a pension now, you've been saving over a number of years, right? So you're putting aside a certain amount of money for a number of years, so it's building up, it's growing and compound without taxes, so it's tax deferred.
Right.
So when you get back the money now, this money now starts to give you an income consistently per month because of the lump sum of money that has been accumulated over time period.
So it's a replacement of your paycheck once you reach a certain age.
You want a portion of your paycheck.
A portion.
A portion of your paycheck.
Okay, you can't promise that.
I promise
that.
But just think about it this way. So you're putting in a portion of your pay now for a number of years, and it is compounding over time,
right.
and then it comes back to you as an income later on. So that's really what an annuity is. Think about a lump sum of money that you give to an institution, and they give you now a monthly installment for income in your pocket. So that's really what it is.
Right.
So a pension is really an annuity.
Right. I'm sure you deal with a lot of clients on a daily basis, monthly, yearly. You understand? And you have various policies, various investment tools for them, but how important is a personal relationship with some of these clients, with some of the customers? Because I wouldn't call them customers, I call them clients.
Yeah. And I was about to tell you,
right?
I said it the right way the first time.
Right. So how important is that personal relationship that that goes just beyond the money? Because I'm not saying that yes, the primary reason why you're in business is because insurance or you set up a certain policy and certain investments, right? But to keep that that interpersonal relationship with that client, how important is that? To the sustenance of the business, that is.
Well, to the sustenance of the business is vital.
Right.
As I said, you said it the right way from before, your clients.
Right.
So your clients now become so intertwined in your entire lifestyle, it's not even funny. So it sometimes the line between where it becomes personal and business, it's so blurred at times because your clients literally become like family members.
Family, right.
You understand? It's difficult to determine.
Whole heap of family have.
Whole of family. I tell you, some of my best friends now are people that I met as clients initially.
Right.
You understand? And right now, I can't even explain it to you.
Right.
They are family, literal family. When it comes down to the lifeblood of the business, right? Consistent referrals. You understand? So you've been taking care of persons over a number of years.
Right.
You make sure that them business is good. You make sure that them have some pension.
Right.
You make sure say them health card good, so any little thing happen. So you sort them out with critical illness. You help them when they buy them property,
right.
things like this. So you've been servicing their policies over a number of years. These persons are the people that consistently refer business to you. You understand? And the consistent referral of business to you is going to feed into your bottom line.
Right.
You understand?
Right.
So that's where the business part comes in. But the business part comes in after you'd have been servicing and taking care of your clients.
Right.
Right? So my little mantra is really simple when it comes down to how I do business. I don't sell the policies. Right? So I take care of the client's needs. So taking care of the client's needs sells policies.
Right.
And sell it, So that's
right,
why I look at it. That's why I look at it.
Oh, okay.
Yeah man, it's important. I think most agents, 99% if not 100% of agents understand and know is that this is part of the business that when I say it's essential because once you look at this business as a career or any business as a matter of fact when it comes down to customer service as a career,
right.
you have to really take care of the clients because once you take care of them they take care of you.
Right.
You understand? So it's what it is.
Right. So in wrapping up this interview, this is loaded, jam-packed with information that is necessary, especially for our demographical listeners, because this podcast really caters to majority. It would be the Gen Z to the millennials, right? So I think this is something that they need to listen to. They might not see it as an importance now, right? But later maybe the millennials more than the Gen Zs, right? They know that this is something that they have to take into consideration if they haven't started already. No, but you know, thank you for taking the time out, Shamar. You know, Cal, just before we wrap up, how can people get in contact with you just in case they need, you know, to sign up a policy or get some information?
Oh, pretty easy, man. You can find me. You can find me on Instagram because you just said it was Gen Z. I know it's Instagram. So I am Shamar Clarke. So I am _ Shamar _Clarke. I think that's my Instagram handle. Shamar Shezi Clarke on Facebook. Right. Shezi was back in the day, you know.
You get that nickname.
So you can find me at, if you want to email me, Shamar _Clarke at sagicor.com. My location is here, 35 Trafalgar. Or the best way to get me is really to either call or WhatsApp.
Okay.
I get a lot of WhatsApps now.
Can you give us the WhatsApp number?
325-6944. So the call number is the same, 325-6944.
Alright.
Pretty easy to get to.
Yeah, man. Alright, thank you again. Thank you again, Shamar. You have been, you know, very, I wouldn't say inspirational, but this is that episode that is very applicable to real world scenarios, to real world situations, right? And on behalf of Hustlers J, and you know, on behalf of our listeners, we'd like to say thank you again, and you know, enjoy the rest of your life. You know, have a fruitful career and continuous, you know, benefits, continuous growth. You know, I really,
that, man. I really what the name of the creator.
Right. So we wish you well. You know, continued success, and this has been an excellent episode, guys. Leave a comment, leave a rating, you know, get in contact with Shamar if this is something that you need, which is everybody, as he said during the interview, needs. So use up resources, walk good, live good. Hustlers J, we're out. All right, peace.